Good morning, everybody. It is about 4 a.m. as I'm putting this together. I feel very guilty for the long time since I did a post. But here I am with a first, I think, which is a morning movie. This is a little hazardous, of course, because it's a good 2 hours plus before the market actually opens. A lot can happen between now and then, but this is meant really more as an intermediate term analysis. So all I'm going to do is go through a few major futures charts on an intraday basis and kind of share my feelings for what's coming, I think, or what matters at least in the balance of the year, which isn't much time left. So we begin with the ES. This is on a 15-minute bar basis. And as you can see here, and I'm gonna switch time frames fluidly to talk about this, but at this level you can see we are getting some kind of basing going on here. And interestingly, that line that I keep referring to as support did exactly that, because on a longer term scale, and this is most of the year here, this is the major base right here, which bottomed, of course, on the 13th of October. And in this time frame, you can plainly see the two shock events for the bears, which were both CPI, October 13 and November 10. They stick out like a sore thumb here and here. And this one flipped the market from bearish to bullish on the intermediate term basis. I mean, in instantly, just bang. This one breathed new life into that bullish move, because as you can see, after the 13th, yes, it went up quite a lot, but it lost about half of that and was just really not feeling it. And when that second CPI came in, it was like paddles to the chest in the emergency room, and whoosh, up it went. And that defined this pattern. And that's what we've been working with ever since, because we've been range bound since that. It's been about a month. We're just kind of we're living from CPI to CPI at this point, so here's 1 month and here's another month. And now we're waiting for Tuesday of next week when the next CPI comes out. And I suppose by that measure, if we're going to get dramatic about it, either A, the CPI is so embraced and so celebrated that, God forbid, we actually get above this major downtrend. And if you're a bull, that's exactly what you want to see. That's good news in itself, but it also kind of sets the tone for the new year. On the other hand, if the December PPI, that is reported in December PPI, a CPI, excuse me, disappoints the bulls, then we have a real shot of breaking this with some gusto, breaking the support. And that opens up just this whole new zone in terms of weakness. So I hate to attach so much import to it, but this quarter has proved that so far the CPI rules the roost. It's more important than earnings. It's more important than Powell. It is, and the irony is that it's kind of stupid, because the notion here seems to be, if inflation goes down, then stocks will go up. Yay. And my view is that inflation could go down and down and down, and then morph into deflation, and then the Fed's gone out of the frying pan right into the fire. I mean, God help them at that point. So it's like the old "be careful what you wish for" thing. But that's the mindset we're in now. Like, lower inflation equals good. That's as far as they get. So we're kind of at the mercy of that. But as far as the ES goes right now, we've had a good few days for the bears, but this line is quite important. Back up to a daily, it's nothing really different here. There's really no special insight from the daily. I'm just kind of drinking it in. So this shows the entirety of the bear market. And last week on Thursday, we got as horrifically close as we possibly could to that line before being repelled. So now This, going back to nice high school geometry here, this neat little triangle here, what's this? Is it a scalene, I think? I don't know. Actually, it's almost a right triangle now that I look at it. That's what was bounding us right now. So we've gone from this bound to this bound to this one now. Just entered this zone. And of course, as your favorite bear, what I want to see, of course, is a failure at this level, which is 3912, and even better if we get the psychologically important 3900 failure. Now, bonds are not something I'm super tuned into, but you can see right away that they're very, very correlated to stocks. You know, there are many times when the correlation is inverted, and I guess during kind of more normal markets, like healthy bull markets, the idea is you got either one or the other. Either stocks are strong or bonds are strong. You know, you can either enjoy the safety of bonds or the speculation of stocks, and a dollar from one is taken out of the other. In this case, it seems they are in almost lockstep. And I say that with some skin in the game, because for the first time in a very long time, maybe even years at this point, but certainly a year, I have a TLT position starting yesterday. I began acquiring January. This is more speculative. This is just in my smaller personal account, TLT puts. So we'll see how that goes. Looking at the NQ, generally speaking, you know, obviously the same kind of movement going on, but the short term is quite a bit different. In the NQ's case, what I've been watching, as you know, is this portion here. This is the analog that I'm looking at. And in this instance, we had kind of a sloppy base, and it seemed to have failed and finally got its act together and went higher. And in this instance, I guess the most bearish thing one could say, you know, the most positive thing one could say for the bears would be as follows. That yes, we formed a similar base. Yes, we got a liftoff and it started to flop. And yet, instead of this going on, instead of reaching escape velocity, you have this. Weeks of struggling, weeks of getting pounded back into the basing pattern. What I'm trying to say is that this is a sick, diseased version of this, which also implies that if we can get some true weakness, particularly if we can work our way below this level, this has a real chance of just melting down from there instead of even bothering to go with this kind of thing. What else is cooking? Let's peek at the RTY. This one is, see, these are all horses of different colors, but this has been kind of in this interesting prison cell. Here's a 1 hour that kind of shows it nicely. And we have been bouncing from range to range here. You can see a lot of drama going on, but in a very short amount of time, we've gone from recent peaks here all the way down to almost eliminating the aforementioned November 10 CPI thrill. We've unwound about 2/3 of that, just eyeballing this here. But longer term, this is probably one of the less interesting charts. I'll just wrap up with energy, which is a favorite of mine, as you know, the whole energy sector. We've really been getting a nice breakdown lately. This support level here we got teased a little bit here, this very brief foray, and then we got some strength due to OPEC jawboning. And this time we seem to have really worked our way lower, as you can see. Lower highs, lower lows, just bang, bang, bang. Well south of that. So we are also well south of the basically the almost the entire Ukraine war rally. I mean, we're back to levels seen in December, before Ukraine was even, most people didn't even know where it was on the globe in the US. So I think lower prices to come there too. All right, well, I'll sign off. Thanks.